Good morning and welcome to Join the Dots. I promised you at the closing of yesterday's show that I'd do a special on Australian housing. I'm not going to do it, I'm sorry. But if you want to watch the article that I specifically looked at and wanted to link, it was by Biko, B-I-K-O, Konstantinos on YouTube. He's a good solid presenter with good solid data and a sensible practical outlook on things. I'm going to move on to something else today because I think we are getting very, very close now to things that are really going to move markets. And I've already given a bit of time to Australian housing this week, and none of my views will change because they're just based on facts. Joining the dots. Okay. Again, if I could ask you, please share with anyone you know, get them to subscribe. Let's get to 10,000. It'll feel good. All right. And we will help people. There's no other purpose to this channel. Okay, it's helping people. It's helping people understand what are very complicated issues, but not that they're complicated only, but that they're misrepresented in every branch of this media. This media that's designed to inform you and help you is just not doing either. Okay, it's not. It's too shallow, too dependent on advertising, funding, governments, etc. It's not telling you the truth. So, first thing I want to talk about today is an AI warning from David Einhorn. Now, David Einhorn is a very respected person in the financial industry, and he sees a massive coincidental link between the AI bubble and 2000. And I've said this many times in these presentations, haven't I? It's so obvious there's a link. Yes, some of the companies will come out this incredibly strong, but most, as in all our industries across the West now, will fail. Only the very, very strong will survive. Out of tech, we had Facebook, we had Amazon, we had Google. Okay, but there were hundreds of search engines being built. And the same thing is happening with AI. There's trillions of investment going in, but only a small percentage of that will come out the other end as huge winners, which will then expand massively. But in the interim, an incredible amount of money will be lost. An incredible amount. And he says that. It will destroy vast amounts of capital. That's what he says. And there will be a recession out of all that capital being lost. Because when all that capital lost is recognised, then you have a banking crisis, don't you? Because all the banks who've lent to these industries, okay, a lot of them will fund through bonds and through private capital, yes, but a lot of bank funding will be lost as well. And that brings down, when you've got the auto industry collapsing, as I explained yesterday, across America, the whole auto industry, okay, used cars, new cars, car parts, gone. Wow. So the same thing will happen to the AI industry. Only there will be a few massive survivors, but there won't be many out of the hundreds that are taking in huge amounts of capital at the moment. Okay, and just to show you what happens there in terms of share prices, if you think about it, let me do the analogy with the COVID market and the vaccine makers in the COVID period. So Pfizer's shares went from about 20 up to 60, okay, on the hope and on the expectation and on the certainty, of course, that it would make a fortune from vaccines. It's now down at 24. So it hit 60, it's now down at 24. Do the math. Moderna went from nothing. It's never developed a product in history, never ever sold a product in history, okay? But it was allowed to sell to the government masses of vaccines, which took its share price up from almost nothing to $420 a share. Where is it today? $24, 5%. 5%. Can you see it? Any boom breeds ridiculous expectations and attracts incredible amounts of money, only to be lost. Okay, all those people who bought Moderna at 100, 200, 300, 400, 420, it's now 24. This is what will happen with AI. because there'll only be a few winners, not hundreds of winners. This is the same in China, isn't it? I've explained to you about the Chinese EV market. There's 120 manufacturers of EVs in China. And even the Chinese now accept that only 20 or so will survive. And then hundreds of property developing companies, and they've all gone bust, or almost bust. Biggest being Evergrande and Country Garden, the biggest two. Booms are a way of losing an awful lot of money. Now I'm going to go on to Michael Pinto for the second link here. And Michael Pinto is an incredibly practical, but he's a bit like Greg Manarino. He's not so out there. He's not so sort of contentious that people can either love him or hate him like Marmite. No, he's not like that. He's very practical. And he talks about the Fed. And the one key figure, like yesterday's key figure on the auto parts, you know, the 1 billion of assets and 50 billion of liabilities, okay? What's the key figure that Michael comes up with? Well, he comes up with, if the Fed are any good at their job, their inflation target is 2%, yes? We all know that, 2%. They haven't hit 2% for the last 55 months. Who else could keep their job when they've missed their target for 55 straight months? Honestly, you know, if you work in a company, you have targets and you have to hit them. The Fed has a target of 2%. It hasn't hit it for the last 55 months. And that's a biased inflation number anyway, isn't it? Because we know it. Because we know shadow stats are showing inflation at 11. And the government's showing it, the CPI, or the CPI as they call it, 2.6, 2.8, whatever. Not 11. And yet the Fed's target is 2. That's its mission, 2. 55 months it's missed it. And the only reason it got it then was COVID. Why do people not get sacked? Why? So we're going to see a sacking, aren't we? And it's brewing and you can see it. And then we'll have Moran come in, which is Trump's man. And Moran wants Fed cuts. He wants rate cuts. So we've got inflation running at 9 to 11 according to shadow stats. We've got them running at 2.8 even according to the US government when its target is 2. And Moran wants interest rate cuts. What Moran can see is jobs being lost. He can see it. Auto parts just one area. The AI boom, when it blows, again, hundreds of thousands, millions of jobs lost. Millions of jobs lost. So the truth is very unfortunate, but it's the truth. It doesn't get corrupted unless you get bureaucrats come in and try and make that truth something else, like perhaps, who was it? First Brands, yeah, balance sheet of 1 billion assets and 50 billion of liabilities. Every period where you have uncontrolled stock market appreciation tempts companies to lie, cheat, deceive, fiddle, whatever you want to call it, I don't care. The end result is the same. The figures are not the figures. And eventually they have to be exposed, like the auto industry is now going through, like Sovereign Bank and Silicon Valley Bank and another bank in New York went 2 years ago, didn't they? 2023. The truth hurts. But now we've got it across all the industries. All the industries at the same time. The housing market is at a record high. How can it be a record? Stocks are at a record high. How can they be a record high when all this fraud is going on and it's being revealed? Because 7 stocks, 7 only, have driven it to this level. And those 7 are in AI. And what does David Einhorn say? AI is going to collapse. Not everyone, but the majority. And the majority are all funded by whom? By people who will lose money, by banks who will lose money. Banks will then stop lending to other businesses because they can't afford to lend to them. They can't afford to lend to autos now, can they? The whole auto industry is screaming, don't lend to me. You can't rely on me. Okay, my new inventory's 17.5%. My passenger car sales last year down 7.6%. I've got stock everywhere. I can't sell anything. What's it telling you about the US economy? Cars. So basic. Okay? So we're seeing these lies being exposed one by one by one. And what happens here And what will happen, in my view, as we go on, is that while Moran will come into the Fed, and while Moran will drive the Fed rates down to 2, 1.5, whatever it is, long-term rates will move up. They will move up. I think I have to do it this way for you. Okay, they'll move up, long-term rates. And so you'll have a very steep yield curve. And while Moran and the Fed, who haven't achieved their target for 55 consecutive months, but they're still employed, would you be? Okay, they're going to want rates to come down. But who would lend into that market at lower rates when they know all the numbers are just wrong? They're fiddled. They're just not honest. So there are loads of dots there to join, but they're all very much focused on one thing, which is everything is overvalued versus its true value. Stocks are overvalued. Houses are overvalued. Company share prices are overvalued given what the fundamentals are in their industry, which means they all come down. And when they come down, banks start to panic. Banks start to realise they're on the hook for incredible amounts of losses in house prices, in car prices, in businesses, in stocks, in a company that was fine 3 months ago, but now only has 1 billion of assets and 50 billion of liabilities. Can you see it? Right, thank you very much. It's a lot of information to go in on the weekend on. Gold and silver, well, every night now we see silver. Every morning I wake up, I see silver over 47, and I see gold going up and up and up. And every day I see the West selling them both down. And then the East buys them up again the next day, and the West sells them down, and the East buys them up the next day. So the East is getting very cheap silver and gold. Who's losing it in the West? The banks. Thank you very much.